Alright guys, so welcome back to my channel. Okay, this is kingsfx trader right here. In this video I'm going to be sharing with you a lot of secrets when it comes to price action and how I catch spike. Okay, when I catch spike live both on YouTube here and also with my mentees, people will always ask me, how do you know that the spike will be coming right now or within few minutes or at this region? People want to know how to catch this spike. People don't want to keep waiting for spike and lose a lot of money. If you have a small account, you might even blow your account waiting for the spike to come. How do you know the exact place that the spike is coming or the level or region where the spikes will be coming? And this is it when it comes to boom and crash. You must know a little bit of price action. There is no two ways about it. Okay, so I know I've created a lot of videos on scalping using indicator, moving average, cross, oversold, overbought, and all that. Yeah, they are working well. Okay, and a lot of people have made a lot of money using those strategies. But the truth is, you have to design a strategy that suits your trading plan, your personality, your risk attitude, your time, and everything about you. That's what when it comes to profitability. If you want to stay profitable consistently, you must be able to know a bit of price action, design your own strategy in a way that it suits you, and you backtest this strategy, you will start seeing profit consistently. Okay, so it doesn't mean that you cannot watch YouTube video, make a lot of money, and keep making money with the strategy. You can do that, but you might find it difficult to maintain using that strategy, because you'll be pushed to watch another video, and in the process you are going to abandon that strategy, okay, and jump into another strategy. In the process, after 2 weeks, you abandon that same one, jump into another one. So you keep jumping from one strategy to another, and that's will make you it will keep you an average trader and you keep losing money. So the best thing that you can, or the best gift I have to offer you now, is to offer you price action. Okay, you need to understand price action for you to know where the spikes will be coming or where the price will be retracing for a very long time. Price action is the key. Why you have to pay attention to this video is because when it comes to boom and crash, when it comes to synthetic indices, there is no news, there is no event, there is no politics effect on the price action. Okay, you can't tell me that you want to go to Forex Factory to check what the news, what US president said, or anything about the banks. No, boom and crash, synthetic indices depends only on price action. So if you know that the solution to your success is price action, why not sit your ass down and learn price action, guys? Okay, so in this video I'm going to share with you some price action tips. Okay, the way to analyze the chart. Okay, understand where the price is likely going to, the direction the price is likely heading to, or where the price will likely reverse or react, okay, when the price is making its movement. Okay, now first, the problem that most of you have is your chart. That's why I have my chart this way. Okay, if you're in my mentorship program, if you're my mentee watching this video, you'll be surprised that I have my chart this way, because you know how my charts look like. So start from the chart. Let's assume you're in a place where maybe you are working, maybe at your working place or the particular office you are working, you just entered and there is a lot of debts everywhere, is scattered, and you don't even see where to sit down. Okay, probably you'll be distracted for the day by cleaning up that environment. Or if you insist to sit there, you are probably going to stay uncomfortable for the rest of the day. So if you have 4 hours to work, you might limit that hours to maybe 1 hour or 30 minutes, or even maybe 2 hours. Okay, you might not stay for a long period of time in that place because the place is dirty and the place is distractive. So you can't stay in a place like that. You can't function. Your whole system can actually function in a place like that. So you need a cool place, a neat place, and a nice place whenever you are working. Okay, when it comes to technical analysis, it's technical by nature, that's the name. So you need to understand that your charts have to be neat and clean. So you don't have to put in things that will be giving you contradicting information. Okay, you might have Mr. A or Mr. B telling you to go up, and the other one is saying you should go down. This one is saying is going sideways, and the other one is saying is maybe is going to reverse. You just have contradicting information up and down because of a lot of things you stack in into your chart. Okay, those things are one of the reasons why many people, get tired with the chart. Some of you cannot stay up to 1 hour analyzing the market, okay, on your system, on your phone or anything, because the phone is dirty and you're not getting the results. Okay, there are a lot of contradiction that will push you to go and look for another video or another strategy that you will now use. Sometimes some of you will combine 2-3 different strategy just in one, maybe in one chart. Put this one, like what we have here. All these things are indicators. Okay, some people have their chart this way, and that is where your failure starts from. Okay, because you cannot actually get a good signal having all these things in place. Okay, so this one might be saying you should buy because it's overbought or oversold. This one might be saying you should sell. The other one you might have a cross to the upside. So you will have 3 indicators contradicting itself. Okay, so you need to do away with a lot of indicators. I don't say indicators doesn't work. I use indicators also, but I use very few indicators, and I try as much as possible to keep my chart neat. Okay, now first, before we proceed, I have to share with you how to set up your chart first. That's the first thing we have to learn. Okay, now we have all these things here, so I don't like my chart this way. So if you want to follow me, I want you to set up your chart the same way. Okay, now first I have to do away with all these indicators. Okay, now I will right click. Okay, if I right click, I will go down to properties. Okay, down here, the last in the list. Okay, properties. Then here I can customize and set up my chart anywhere, anyhow I want it. Okay, so but before I start doing the customization, I just have to delete all the indicators I have here in this chart. Okay, because I don't need them for now. Right, what I need to do now is to right click, go to indicator list. Okay, this one here, indicator list, then click on it, then select all the indicators here. Okay, I'll select and delete them. Okay, delete. Anyone you select, you click on delete and it will disappear. Okay, so this is it. Our chart is a bit kind of looking good. Okay, so but we have to still customize a lot of things. Now here you have this is a volume. Okay, by default is always be there. So for you to remove this volume, because I don't need it, okay, right click and go to properties. Okay, then if you, from here we have show ticker, you just read down, you are going to see where we have our volume, which is here, show volumes. Okay, so we just you see here, sorry, you have show ticks. Okay, show tick volumes. Okay, then we deselect that. Okay, we don't want to see that, it's selected already, so we just remove it. Okay, the volume will disappear. Okay, we don't have the volume lines again. Okay, so now the next thing I want to do is I want to remove all these grid lines I'm seeing, all these lines I'm seeing here. I want to remove it. Okay, so I will just right click again, go to properties. Okay, now when you go to property, you're going to see this place. Okay, show grids, it's selected, so I have to remove it. Okay, so I will deselect that, and my chart is looking nice, guys. Okay, so you can see how the chart look like now. So it will be more comfortable for you to see and analyze the market, okay, using this kind of chart. Okay, for me, I always like to keep my chart, use a white background for my chart. So I'm still going to change the background color to white. If you love black, you can stick to black or change it to any color of your choice. So as I'm changing my own to white, you can equally change your own to any color following whatever I'm going to be doing. Okay, first I will right click, go to properties again. Okay, then come here. Okay, you can see we have common, we have show, and we have colors. Okay, so I'll come to color. You can see the first thing here is background, so I have to change it to white. Okay, white, sorry, my background should be white. Okay, you can see I have my background as white. Okay, but there's something wrong now. Okay, there's something wrong that we have to pay close attention to. Now if you look here, we don't have our price list. Okay, we're supposed to have our price, so that when we are drawing maybe support or psychological level or anything, we should know where the price is. Okay, and how to mark out. So the price is white, so we have to change it, okay, so that we'll be able to see these prices here. Okay, so I just have to right click again, sorry, I have to right click, go to properties. Now I will go to this foreground, okay, foreground. So I will go there and change it to black. So once I change it to black and click OK, you can see my prices, the price levels have appeared. Okay, the levels have appeared right here. Okay, so after this, I don't like the color of these candles. Okay, so I'm going to change it to, I love using black and red, but for this video I'm going to use the popular green and red. Okay, so I will just go back to properties again to customize the candlestick. So here you have the bar up. The bar up is the wick of the bullish candle. Okay, the wick of the bullish candle, the shadow, that small line you are seeing at the tip of each of the candlesticks. Okay, so that is the for the bullish candle. Okay, that is the bar up. So I'm going to change it to black. Okay, I'll change it to black. Then bar down is the one that you have there for the bearish candlestick. Okay, so I'm still going to maybe change it to black, keep it as black again. Then the bull candle, the main candle, okay, the body of the candlestick. Now I'm going to change the bull candle to maybe green. Okay, this one is okay. Then the bear, which is the bearish candle, I'm going to change it to red. Okay, now we have our candlestick set up. You can see our chart is looking neat now. Okay, our chart is looking neat. So with this, be able to do our analysis proper without any distraction. Okay, now after this, the next thing you have to do again is that you need to save this as a template. Okay, the reason being that if you did not save this as a template, all right, so what will happen is that whenever you want to set up a new chart, you have to start from beginning. Okay, you have to start setting up this, changing the color, the candlestick, customizing the chart and all that. If you go to new chart, okay, this is a new chart. So for you to set up this one here is crash 500. Okay, why this one is boom 1000. So if you want to set up boom 1000, you need to start from changing, removing the indicators, changing the colors, customizing the candlestick and all that. So you don't want to keep passing through those stress. If I go to boom 300 now, you still have that we need to set up again. So you go to crash 1000, you still need to set up. So we don't need to keep doing that. You just have to save the templates, okay, of this our chart, so that each time we go to any new chart, maybe boom 1000 or boom 300, we just load the template and we have the same thing that we have here. Okay, so all I need to do to save this template this way is that I will right click on my chart. Okay, then go to templates. After time frame, you get templates. Then you can see save templates right here. So I'll click on save template. Then I will save it as our templates. Okay, let me see our templates. Then I will save it. So now I've saved the template. Okay, so I love my chart this way. So all I need to do now is that if I go to a new chart, okay, this is 1000. Instead of me to start setting up my chart again, I'll just right click, okay, go to templates, and I'll come here and load templates. Okay, I will load the templates, search for our template. Okay, if you look, we have it here, our template, and I will open it. So here automatically boom 1000 is the chart is already set up. Okay, so we go to boom 300, right click again, go to templates, load templates. Okay, then click on our templates. Okay, and open. Boom 300 is set up. Then crash 1000, right click, go to templates, load templates, then our templates, open, and we are done. Okay, so we are done setting up our chart. Our chart is looking nice, all of them. So each time you want to set any chart up, I use even volatility, step index, any of them, just go load the templates and you have the same thing this way. Okay, you can change the color of your own to any color of your choice. So I love using white. Okay, for the purpose of this video, I'm using green and red because it's the most popular. The green is the bullish candle, while the red is the bearish candle. Okay, now starting from crash 500. Okay, Now we have set up our chart. What is the next thing we have to do? So the next thing is that we need to understand the concept of market structure. Okay, so you cannot do anything about it when price, as long as price action is consigned, so you can't avoid market structure. Okay, you need to understand the concept of market structure. Okay, because whatever we are doing, we need to understand how the price moves, and probably if you get the concept, you'll be able to speculate the next movements of the price and decide the position you are going to take, either to sell or to buy. Okay, so we need to understand this concept. Okay, so first we are going to be looking at market structure. So basically, what is market structure? It's simple, guys. I don't have to start blowing grammar here or anything, but just know that the market structure is the nature of the price action, what the price action is doing. Okay, what is it that the price action the price is doing? Okay, what is it that the price is doing? Is the price trending? Is the price ranging? Or the price is choppy? Okay, now basically we are going to be focusing on just two market structure, which is the trending market and the ranging market. Okay, when the price is trending, the price we keep, if the price is trending, the price moves in zigzag. Okay, or the swings. Okay, in swings. So you don't expect the price, because the price is trending, you're expecting the price to just push up this way because the price is up, or because the price is going down, you want the price to push down this way. No, the price moves in swings. Okay, the swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. But the whole concept is that the price is trending up. The one that is trending down will be making those swing low, swing high, swing low, swing high to the downside. So the concept is that this price here, this is an uptrend. Okay, the price is trending to the upside, while this one here is trending to the downside. Okay, it's trending to the downside. So that's the concept. This one up, this one down. So market structure, we have two basic market structure we are going to be focusing on. Okay, maybe you have seen a lot of market structure, you have heard about different types of market structure, but for me, I know of three market structure, which is the trending market, the ranging market, and the choppy market. Okay, but I'm basically going to be focusing on what we need, which is the trending market and ranging market. Okay, now what do we mean by the price trending? Okay, if the price is trending, it means that the price is actually going in a specific direction for a very long period of time. Okay, now it depends on the time frame you are using. Okay, while watching the trend, and it's advisable that whenever you are checking the trend, you should go to a higher time frame, right? So a trending market is simply a market, okay, that have a defined direction, either to the upside or to the downside for a given period of time. Okay, depending on the time frame you are using. Okay, now if you want to check if the market is trending or the market is ranging, you have to always pay close attention to direction. Okay, so why a ranging market is simply when the price is going from left to right. Okay, the price is actually going sideways. Price going sideways this way, that means the price is ranging. Okay, and when the price is ranging, probably the price might be ranging within two bounds. Okay, which is the upper bounds. Okay, and we can say or take this as the lower bound. Okay, and probably as we proceed or progress with the tutorial, you are going to understand what this means and also this. Okay, that's for a trending market. Okay, so how do we now identify this trend? Now we on crash 1000. Okay, this is crash 1000, and basically we need to understand where the price is trending to. So whenever you want to check the market structure, you need to go to a higher time frame. Okay, why you are going to a higher time frame? That you want to take a position that can stand the test of time. So if you go to 1 minute time frame, you are going to have the trend. The price might be trending up or down in 1 minute time frame. Okay, if you go to 5 minutes time frame, you still see the trend. But for you, you should know that 1 minute is in 5 minutes, 5 minutes is in 10 minutes, 10 minutes is in 15 minutes, then 20 minutes is in 1 hour, and 1 hour is in 4 hours. So if you start from 4 hours, that means you have considered other time frames. You have put other time frame in consideration. But if you if you stick to 5 minutes time frame when you are checking the trend, that means you have failed to consider the higher time frames. Okay, the 15 minutes, the 1 hour, 4 hours daily time frame. Okay, so you need to start from a higher time frame to see the direction, to see the overview of where the price is heading to. So it doesn't mean that you should, after checking the trend, you should enter your trade on that higher time frame. That's when we are going to be also checking what is known as time frame confluence. So you need to also switch to a lower time frame to make sure that, okay, this same time frame, the lower time frame is also giving you the same information you have there in a higher time frame. And that's exactly the reason why I remove all these indicators, because most of them are going to be giving us contradicting information, and that's not what we want for us to be profitable. Okay, now first, if you look at this price, okay, look at the current price here. This is 1 hour. I can switch to 4 hours time frame, okay, just to start there. So you can actually start from 1 hour to check your trend. Okay, you can check on 1 hour, you can check on 4 hours, you can check on daily. So probably I do start from 4 hours time frame, then check my 1 hour time frame, and then switch back to my entry time frame, 15 minutes or 5 minutes time frame. Okay, so now if you look at this, the direction of the price, okay, right now you're going to see that the price is actually trending to the upside now. Okay, that's where the price is actually trending. So you need to pay close attention. You have this price the kind of the bullish momentum right here. Okay, we have bullish momentum right here. You can see those candlesticks, those beautiful bullish candlesticks to the upside. So the price actually make a higher high here, higher low, higher high, higher low, and the price is making another higher high. So we are expecting maybe a pullback anytime from now, or go up this way, pull back, and keep going to the upside. So probably with this, you have seen the direction of the price. Okay, so whenever the price is trending to the upside, you are going to be having these swing highs, okay, and swing lows. You are going to be having the swing highs and swing lows. Okay, so the downside is the swing lows, this one is the swing high, this is swing low, this is swing high, this is potential swing low, and this swing high, and the price keeps making that movement to the upside or to the downside. So the trend bias, we should know by now that the direction is up. So for the fact that the direction is up, you should understand now where you are going to be targeting, or the opportunity you are looking for here on crash 500. So you should not be expecting crash. Okay, you should not be expecting those drop. You should be expecting price going to the upside. So if you like catching those drop, that spikes, then crash 500 is not for you for today. That's how you decide or make decision of what to do. Now if I go to 1 hour time frame, okay, you are going to see that this price is clearly trending to the upside. Okay, so for the fact that price is trending to the upside in 1 hour, you can now go down to maybe 15 minutes time frame to start drawing your trend lines, or maybe checking out for patterns or any candlestick formation. Okay, so this is an uptrend. This is a clear example of an uptrend when the price is trending to the upside. So if I switch to 15 minutes time frame, okay, you can see the price making this movement. I just have to zoom out a bit, so you can see this. If you draw your trend line, you can pick this line to the upside. You see how perfectly it's aligned, and you see that the price is actually trending to the upside. Okay, so let's check for a downtrend example. Let's see if you are okay. Good, we have this one here. This is boom 300. Okay, so if you look at this price, you don't need anybody to tell you that this price is going to the downside. Okay, the direction of the price is down, so we are focusing on selling boom. Okay, so when you see the direction, you take a decision of what to do for the day. Okay, you have seen that the price is down, so we probably going to be selling boom 300, okay, for the day. So if you go to 4 hours time frame, you are still going to see that the price is still down on 4 hours time frame. You can see clearly that the price is down, so you don't have any business buying or catching spike on boom 300. So you'll be able to make a decision of what to do. Okay, so understanding trend is going to help you in decision making. So if you know that the boom is down, you know that you are going to be selling boom. You are not expecting spikes. So if you use maybe you watch my videos and you see where I say how to catch spike, put this indicator overbought, you place a buy and you catch spike, and you check the trend and the trend is down, and you are using that strategy, man, you are going to fail. The strategy is going to make you lose a lot of money. Yeah, you are going to lose a lot of money, and then you will think that the strategy is not working, or you are losing money, or you are just make money, you lose it, make money. That's how it's. You have to know a bit of price action, because it's going to help you avoid fixed signals and a lot of things. It's going to narrow down your analysis. You don't have to buy and sell at the same time. You have to check the chart, know the direction, make decision of what you'll be doing. If you are going short, you know that the price is down, you are going short. If the price is up, you are going long for the day. There's nothing that will push you to buy boom 300 today, because you have seen that the price is down. So for the fact that the price is down, you are only selling. Okay, so this is part of your trading plan, or why you need to have a trading book. So when you check the trend, you'll be able to write down, for the day I'm targeting selling opportunity on boom 300. You go to crash 500. You target buying opportunity on crash 500. You then check maybe boom 1000. You can see that boom 1000 is still buying. So you're only going to be looking for buying opportunity on boom 1000. Okay, so let's check crash 1000. So crash 1000 is actually this is a change of trend. Okay, this is a change of trend to the downside. So you are definitely going to be catching spikes if you want to trade crash 1000. You are going to be having those drop, those big candlestick that most of us are looking for if you are trading crash 1000, because the price have been trading to the upside, but currently the price changes to the downside. This is a change of trend right here. Okay, we might not be able to cover change of trend in this video, but I believe what the information we are going to get in this video will help us understand how to trade boom and crash successfully. Okay, now remember, we're able to identify when the price is trending to the upside. Okay, like what is happening here. From here to here, you can see that the price is up. Okay, currently the price have changed to a downtrend, because if the price is going to continue to the upside, we are expecting the price to make this pullback here and continue to the upside. Okay, but what happened is that the price broke the previous low, okay, which is this point. This is the previous low. Okay, and the swing high is now lower than this. So the price has started making the swing low, swing high, swing low, swing high, swing low again. So another swing high probably, then continues to the downside. Okay, so that's how you know when the price is changing. So the price broke our trend line and keep pushing to the downside. Okay, so the price disrespected our trend line. So it's a kind of signal. You can see spike is still coming on this. So if you see a chart like this, you know that you are going to be selling. Okay, because the price, the momentum, the bearish momentum, the momentum is high. Okay, you can see the candlestick formation, how beautiful these bearish candlesticks are. So you need to follow the trend. Always trade with the trend. Don't trade against the trend. That's the first secret you need to know. After understanding market structure, you should also pay close attention to your position. Where and what are you going to be doing? For the fact that the price is going up, what is now your decision? Please, whenever the price is going up, make sure that you are taking a buying position only. If the price is trending down, make sure you are taking a selling position only. No matter the strategy, okay, the trend is always the king. Okay, so that's for trending market. Okay, so the opposite of this is a ranging market. Okay, when the price is actually going sideways. Okay, if you look somewhere here, you can see that the price kind of was ranging here. Okay, for a long period of time. From here to here, the price was just ranging. Okay, before it broke out, push down, come up and keep moving. So the price actually ranging at this place. Okay, so between this bound, okay, let me just increase it a bit so that you guys can see clearly. So here the price is ranging between this. You can see the movement. Okay, so when the price is going sideways, okay, when the price is going sideways, just know that the price is actually ranging. Sorry about this. The price is ranging. Okay, so once the price is ranging, you can actually take a position, you can still buy or sell, but you need to understand the concept of support and resistance. Okay, and that leads me to what the next thing we are going to be discussing, which is support and resistance. Okay, what is a support and what is resistance? You have been hearing this, and we are not going to spend much time here on support and resistance. Remember, a support is simply a level, okay, below the price. Okay, so this particular line here is serving as my support, because currently, if you look at the current price action right now, okay, what is happening here, this price is above the line, so this support is below the price. Support is any level, okay, any level that is a kind of below the price, where price react to or reverse from whenever price approaches. You can see that the price broke here and come to this support level, reacted to the level, form our pin bar candlestick pattern right there, then reverse to the upside. The price come close to our resistance level, reacted and reverse, then keep going, come here again, reacted, form a pin bar, reverse and come down here, form an inside bar candlestick pattern, reverse to the upside. So you see how the price respect these levels. Okay, that means if the price keep doing this, okay, probably in nearest maybe hours or minutes, when the price comes back to this level, we probably going to take a buy, okay, when the price approaches this level again. Okay, if you see here, the price broke it, but there's a reason for that. That's because of the momentum candlestick coming down. You should know that it's not going to hold. Okay, with this formation, you should know that it's going to break this because of the momentum. Okay, so I think you still have to, I think I have it in my free course I'll be launching. So I have to also remind you that I will be launching my course very soon. Okay, probably this month, so you can go there, take the free section of the course. If you want to pay for the paid version, you pay and take the course. You know, you are going to understand how to use price action to your own advantage. Okay, so that's that. If you are new to my channel, please consider subscribing to this channel. Please, I'm begging you, subscribe to this channel, like this video, share this video. Let's get this video to 2,000, 3,000, 4,000, or even 10,000 likes. Okay, so we proceed. So how do you now mark out these levels? Okay, now we know that support and resistance are levels above and below the price. Okay, the resistance is the one above the price, while the support is the one below the price. I just see it as the floor. Okay, the support is like a floor, while the resistance is like a ceiling in a house. Okay, so the one under is the floor, which is the support, while this is the resistance. So the price probably bounce between the resistance and support. Okay, so all you need to do for you to draw a support and resistance, just understand the concept of swings. Okay, swings. Now the price don't move way up, okay, this way. The price don't just move maybe this way to the upside, I've said it again, or this way to the I've said it before, or this way to the downside. The price moves in swings. The swings, okay, swings or curves. Okay, so the same way if the price moving to the downside, the same way if price moves to the maybe sideways, the price will still move in swings. Okay, so you need to understand the price movement first. So the price moves in swings, so you have to know where we have those swings, and once you know where we have those swings, you'll be able to mark out a good support and resistance, perfect support and resistance. Okay, so if you are talking about price action after considering the trend, okay, the next thing you are probably going to be looking at is the support level and resistance level. Okay, because these are places or levels where the price will reverse from or react to. So probably as a trader, you are looking for where the price is going to reverse, or where the price will react and continue, break out and keep going, or that is trend continuation or anything like that. So you should pay close attention to those levels, so that whenever the price come close to that level, you are expected to take an action, either to buy or sell, depending if the price is at support or if the price is at the resistance level. Okay, so now we have this price this way. Let's say we want to mark out support level and resistance level in this chart. So I just have to zoom in a bit. So if you look here, if you pay close attention, you are going to see some swings. Okay, so I'm going to use this to mark out this swing. You can see this is a swing. Okay, this is a swing, this is a swing, this is a swing, Okay, this is also a swing. We have all these swings. Okay, so I just want to make it clear to you guys so that you'll be able to follow, or at your own end you'll be able to mark out this support and resistance easily, so you can see these swings. Okay, so now we have all these swing highs and swing lows marked out. So what we have to do to draw your support and resistance, you just need to connect all these swings with a horizontal line. Okay, just connect these swings with a horizontal line and you are done drawing your support and resistance. As simple as that. Okay, now what I need to do is to pick my horizontal line here. Okay, you can see it here. I'll drop here. So I have first support resistance level because it's above the price. Okay, this one I drop it here again. I have my level again because it's connecting this one, and this one. This one is connecting 1, 2, 3. Okay, this one is connecting 1, 2, 3, 4 swings. Okay, so I have to pick another one to connect this. Okay, this one is connecting 1, 2, and even 3 here. Okay, now I will pick another line to connect this one. Okay, it's connecting 1, 2, and this one is 3, 4. Okay, I did not actually put this thing there, so I'll pick another one to mark out this. Is connecting 1, 2. Okay, I can pick another one, mark out this one. I want to connect this one here. So this one is actually connecting this one, and this one. Okay, so this is exactly how to mark out your support and resistance. Just connect those swings that you are seeing. Okay, connect those swings you are seeing on a higher time frame. I'm using 1 hour. I think the best for me is 4 hours. Okay, I use 4 hours, then come to 1 hour to see how they react and adjust the lines, then switch to my entry time frame to start checking for entry. Okay, now I've done connecting these lines. Okay, there are maybe a lot of them that we needed to connect. Okay, but I just want to stop here. Now you have these lines, okay, connected. You have this support. We have marked out some levels which we are going to be paying attention to. Okay, so you can see that the price is close to this level. You can see here we have a support. We have support also. Here the price is close to this level. Okay, so we are definitely you don't need anybody to tell you that, okay, the price is here, so we are going to see some reaction. Okay, the price may be reversing to the upside. Okay, or the price ranging before breaking out. So we are going to have two things here. As the price is approaching our support level again, now the price is definitely going to do this, maybe range here, okay, and break down to the downside, or the price will just range and reverse to the upside. Okay, so what are we looking for? What are we going to be using? This information we got about support and resistance? How do we apply it? How do it help us? So now you have seen that the price is approaching our support level. If you're on this trade, you should be taking profit by now because the price is coming close to a support level. Definitely the price will react to this support level, and if care is not taken, the price might pull back again to this level before it keep going down to the downside. That's how you take profit. That's how you mark your entry. You check your take profit level and you wait for reversal before you continue. Okay, so what we are going to see is that the price might pull back again to this level, then keep going back down, or the price might break it and keep going down, but there must be a reaction at this level. So you don't want to stay in a trade while the price is close to a support level or resistance level. So these levels are for entry and also take profit and stop loss level. Okay, so now you understanding just support and resistance is going to help you take decision quickly whenever the price is close to any of them. Okay, so that's basic thing you need to know about support and resistance. So if I go down to maybe 15 minutes time frame, okay, you can see how this thing reacts. Look at the price bounce back to this support level. Okay, after to this the price got to this level, the price pull back again to this one. Okay, the price pull back to this one. This resistance held the price from going to the upside. We start having our spike to the downside. When the spike got to this level, the price ranged a bit. What I say, the price will react or reverse. So this first one here, the price actually reversed from here, come here, reverse from here, come here also, reverse from here, but it came to this point, it reacted to this point and broke that point and keep going down. Okay, so it break out from this support level and it's coming to this one now. So probably when the price is here, the price is going to react to this line again, either reverse to the upside. Okay, you are going to see the price reverse to this side, okay, before going down, or the price is going to break that level and keep going down. Okay, two ways. So you need to understand this. So understanding support and resistance is going to help you while taking your decision, okay, or while making entries. Okay, so that's for support and resistance. If you want, you can switch to a lower time frame, like maybe 5 minutes time frame, to check out this. But just know that while drawing your support and resistance, you should always consider a higher time frame. Okay, you should go to a higher time frame to draw it, come down to lower time frame to see how they react to those levels. Okay, so even though when you start from here, you can see the price keep coming down, come here, reacted here, push back, come again, tested that point before it broke that level and keep going down. Look at this point again, the same thing happens. You see that this supports and all these levels keep playing out. These are potential places. So if you are catching spike, for instance, okay, if you want to catch spike and the price is coming close to this level, so these are the points you start, placing a trade, okay, because the price is currently on a level, okay, where an obvious support level where we are probably going to have a reversal. So if you place a trade here to catch this long candlesticks, okay, that is the spikes or drops. So once you see the price here, if you place a trade to maybe you place a sell here, you are going to be catching those spikes without wasting time. So this is the secret, guys. There is no other secret. You must understand this. You must understand support and resistance for you to start taking a profitable trade. You can see the price come here. After the price get to this level, you see this spike. Okay, the price push up again, come to this level, you can see those multiple spikes. The price come again to this level, you can see these drops. Okay, so the price keep respecting this zone. You can see the reversal point. If you are scalping using any scalping strategy, picking 10 candlesticks, 20 candlesticks, all this, when you see the price currently, if the price is on a support level, then for crash, you are going to be scalping. That's where you pick those candlesticks successfully without having any spike at all. Okay, so if you want to be safe, you want to be profitable, guys, you need to understand this concept. You can see how the price reacts. So we can keep going on and on and on and on and on and on and on, and you see it, reacting and playing out. So this is it for support and resistance, guys. So you need to understand this. Now, the next thing you have to also check is time frame confluence. Okay, so time frame confluence is basically having different time frames saying the same thing. Okay, now if you enter your trade on 15 minutes time frame, okay, you need to check the higher time frame before you start placing a trade. Now the price, let's say let's use this for example. So you can see the price here is currently trending to the downside. Okay, so you need to also check what is the price doing in 1 hour time frame. So if I go up to 1 hour time frame, or let me start from 30 minutes time frame, the price is going down on 30 minutes time frame. You can see it, the price is trending to the downside. Okay, so what if we go to 1 hour time frame? Are we still going to see the same thing? We switch to 1 hour time frame to see where the price is trending. On 1 hour time frame, the price is still going to the downside, guys. Okay, now you have seen that on 30 minutes time frame the price is down, 15 minutes time frame the price is down, 1 hour time frame the price is down. Okay, so you have these 3 time frames saying the same thing, but sometimes you might open a trade, 15 minutes time frame is down, 1 hour time frame is up, 30 minutes time frame is ranging. You have different time frames saying different things. That means that trade is not for you. You have to avoid trading that kind of market structure. You need to see confluence in time frames. Okay, different time frames should be saying the same thing for you to take advantage of that market. That means that the market should be a trending market, because if it is trending in 4 hours, probably it's going to trend in 15 minutes, sorry, in 1 hour. And if you come down to 15 minutes or so, you might be seeing something different. So you must make sure that you have time frame confluence for you to start jumping into a trade confidently. So when you do this and put, narrow down your analysis and put all these things into consideration, you will start seeing consistent profit. Okay, you don't just make money and blow it. No, because you don't enter trade randomly. You have to consider all those things before you jump into a trade. So guys, a lot of things to discuss about price action, but I believe these are the basic things you need to know about price action. If you are new to my channel, please once again subscribe to this channel, support this channel, also like this video, leave a comment the next video you want me to create on price action. You can see you can actually trade without applying or using any indicator. It is possible. I do it a lot, and you can equally do it. If you love indicator, I'll still be dropping videos on indicator back to back, but for now we are just looking at the price action. Don't forget that we started by setting up our chart, then checking out market structure, different market structure that we have, understanding trend, how to take advantage of a trending market. Then finally we have we were able to put in our support and resistance line, then understand our entry point, how to take profit and stop loss level. And I say that this support and resistance is going to be helping you take profit, stop loss, and also show you entry points. That's exactly the role of a support or a resistance level. Okay, remember, you are not going to be taking this as just a line, you are going to take it as a level. So for the fact the price is here, don't just expect that the spikes will start coming immediately. So the price might push up a bit. You can see what happened here. The price might push up a bit, or the price might not even get to this level, okay, like this one. So once you start seeing the price reacting or some patterns, then enter your trade. So you mustn't wait for the price to come here, that exact point, for you to place a trade. Okay, so that is it for this video, guys. I hope you enjoyed this. Don't forget to follow me also on Instagram, join my Telegram group, and my course is coming up. Okay, I'm super excited for this course, okay, because I will have time for myself, guys. I have mentorship program almost every day, so this course is going to relieve me from all those things, and I will be giving you guys back-to-back free content here on YouTube, and also signals in my trading community. I'll see you guys in the next one. Enjoy. Bye for now, guys.